In a market where stock valuations continue to creep higher, one way to look for values is to study free cash flow. I'm Jack Otter, editor of BARRON'S.com. I'm here with Ben Levison, who writes the Stocks to Watch blog. So Ben, every Monday we get together to talk about stocks moving on a story in Barron's. The two positives we have to talk about have something in common, which is their free cash flow yields look pretty strong. Can you just very briefly explain what that means?
Sure. It means that they're bringing in a lot of money and that they don't have to spend it for their debt or for operations or anything like that. This is just leftover cash that they could do a lot of different stuff with.
So Jack Howe writes about NetApp's. This is not a very sexy company. It creates the hard drives and the flash drives off in the cloud where we store more and more stuff. But he's pretty positive on this company.
Yeah, I mean, this is a stock that's been punished because it used to grow revenue at about a 4% clip, and recently that's just been falling. I think it's barely growing its revenue right now. A lot of that has come because it was, companies used to pay it to slap their name on storage, and
it would build the stuff and they'd put their own name
exactly,
on it.
And they're not getting much of that business right now. That's just fallen apart, but it's not a huge part of their company. And at this point, it looks like that is probably coming to an end. And if that's the case, the revenue is going to start picking up again. The other great thing about it is it trades at just 12 times earnings, which is less than half of what its average is over the last 10 years. So it really looks cheap as well.
And we know that the multitude of things we're storing in the cloud is growing. There is certainly a need for this service. Maybe this company will provide it.
Yeah, there really is a need, and it's not only that need for from consumers and companies, but it's also makes NetApp an acquisition target potentially, because corporations are going to be looking to sell this product to more and more people.
So NetApp shares are up more than 4% today. Another company, International Paper, is up more than 3% on a positive story. What's going on there?
It's another one where it's it's another name that really isn't sexy. They make container boxes, out of cardboard, and they're another one that's been very cheap. They haven't been growing fast, but they've really started to accelerate their use of their cash. They have a ton of it, so their dividend yield is now up at 2.9%. They have a 2-year buyback plan that they've already completed about 2/3 of it in just 9 months. So it's really looking like there's a lot of potential here for it to rise. And it's also dirt cheap compared to the rest of the group.
And both companies just are kind of good examples of how our lives are changing right now. It's sort of the Amazon world, right? We store everything on the web, we buy stuff from Amazon, and it comes in these corrugated boxes. I feel terrible ripping them up and putting them in the recycling every weekend, but that's the way it goes.
It's either that or let our kids make art projects out of them.
That's always fun. That's true. So on the negative side, Bill Alpert writes about a company called ResMed. It makes those masks and the machines that people use when they have sleep apnea or otherwise need oxygen forced down their throats at night.
That's right. And it's one that has had a great run for a very long time. It got hit a little bit because there are these concerns that the government was going to crack down on how much you could spend on it. Those concerns look like they've passed. They probably shouldn't. This is a company that the government is going to really, with all the trying to keep the spending costs down, this is the kind of company that's going to be on the receiving end of that. And
we should point out that a lot of their revenue comes from Medicare, people who need these machines, and we pay for it as taxpayers.
Right, and then if the government does follow through on these, it's not really threats, but they're trying to do these things to keep the prices down. This is really going to hurt their bottom line, and investors will have to get used to them growing a lot slower than they have in the past.
One analogy was kidney dialysis. When the government started to find ways to reduce expenditures there, revenues fell dramatically. It could happen to this company. And ResMed shares split adjusted, according to Bill's story. If you'd bought the IPO, your cost is less than $1. It went as high as 57. Now it's about $50, but it's down about 3% on Bill's story. Thanks very much, Ben.
Thank you.